Hi everyone and welcome back to QuotaKrusher. This is Module 2, Unique Value Propositions. And over the next few minutes, I'm going to share with you what I've learned about creating unique value propositions that are compelling and will drive your success in 4 easy steps. Now, many salespeople completely neglect their UVPs, their unique value propositions, or they make them generic across their entire customer base, which is a trap for young players. Or they just sit back and wait for marketing to serve it up to them on a plate. But every customer has different needs, different drivers, different aspirations, and different consequences. And you're at the coalface. So you're perfectly positioned to know how to craft the optimal UVP for each and every situation. Now I'm going to share with you what I've learned about creating UVPs that are compelling and will drive your success in 4 easy steps. And if you follow me here now and do some practice, you'll be using your own carefully crafted and incisive UVPs to cut through and improve your results in no time. Now just lean in for a moment, because what I'm about to tell you is really important. If you don't have a unique value proposition, then all you're left with is a price. And that's a race to the bottom you just don't want to win. So applying an effective UVP will benefit you in your sales capacity as a sales professional because, firstly, it's what gets you through the door in the first place. It's what gets their attention. So what are the 4 easy steps to building a unique value proposition? Well, number 1, make it unique. Number 2, make it compelling. And number 3, put it in their language. And 4, make it time-bound with consequence. So let's start by explaining how to make your UVP, well, unique. In other words, how can you stand out from the crowd in a good way? Now, put simply, a unique value proposition is something that's unique to your brand and to you individually. It has to resonate with the prospect or customer and exceed their expectations. And if it's unique and compelling, it should really begin to pique their interest. So what's going to make your proposition unique? Well, it's got to be something that only you and your company can do to either help them make more money, help them save more money, or help them reduce risk. Or even better, the Holy Trinity, all 3. Save me money, make me money, keep me out of trouble. Now, once you've answered this and researched your competitors to see how they compare, your uniqueness should become obvious, and to do this, you'll also need to understand the prospect's business intimately, which means burying yourself in their annual reports, reading their statements to shareholders, reading press releases, understanding the industry they're in and the changes that are afoot, looking at all the information to find that little gem that you can hang your hook on to use to articulate your value to them based on the advantages that only you can bring them, based on your knowledge of their business, the competitive landscape and the industry trends. And you don't have to be a Fortune 500 company to cut through and be unique, right? In fact, sometimes it's better not to be. It's a little bit like judo. Understand the competitor's strengths and use it against them. For example, if you're just a one-person show last week and you took on a new staff member the week after, you're the fastest growing business in the sector. That's 100% growth, right? And because of your humble size, you're still able to offer personalised service. And if you're a small to medium-sized business, then you could be a boutique specialist company who carefully chooses your clients. Or if you're the biggest company in the business, then you're the most trusted and dependable brand in the category or segment. This careful positioning of your company should be unique in the mind of your prospect, and it needs to be articulated at the back part of your unique value proposition, because the prospect or customer story must be out at the front of your UVP. That way they're more likely to resonate with the message because it's about them. What you're saying is primarily about them. You come second. And that's the fatal error so many organisations make. I see it all the time. They have that script flipped and make it more about themselves than their audience, which just makes people instantly and immediately disinterested. So putting your story behind theirs is key, and it's a great way to separate yourself from your competitors. We'll dive into that later when I take you through how to craft compelling emails. But remember, the prospect story must be up the front. And that's paramount because that's what they want to, make sure you've understood, their needs. And you'll need to differentiate and articulate your product or service offerings as well, and your own personal value you bring into the deal as well as part of this. That's going to be down to your creativity, how you structure that message. Now let's talk about how to make your unique value proposition, well, compelling. This is about explaining how your UVP can be relied upon to deliver something that's important to the prospect. That means showing them how your solution can move the needle on a part of their business that really matters to them, preferably in their own role for the executive you're communicating this to. For example, if your solution can reduce the customer attrition rate, also known as churn, from say 4% to 3%, that's not 1%, that's 25%, because 4 minus 3 equals 1 on 4 equals 25%, right? Fun with maths. And that's important. When you're structuring the numbers, make sure you use the numbers accurately, but dramatically as well. So if you're articulating a 4% to 3% reduction, and that's an improvement, that's 25%, not 1%. So continuing with the value you bring, the best example of benefit to a business is that you can show the benefit to the bottom line, profitability. Then everyone's going to be interested typically. So making it compelling is about showing how your unique value can improve or shore up their business performance in one way or more, preferably profitability or risk as well. And the most effective way to do this is to bring in the numbers and make sure the numbers are accurate and they hit hard. But remember the holy trinity: save me money, make me money, keep me out of trouble, right? Profit, cost, risk. And obviously cost is part of profit as well. Now let's talk about the language of putting it in their dialogue, their vernacular, the language that will resonate with them, their business language that they use. And you know what? One of the smartest things I was ever told was, son, don't run and chew gum at the same time. But the second smartest thing I was ever told was that salespeople talk PowerPoint and decision makers talk Excel. So get to the numbers. So you need to turn your unique value proposition into a language that your prospect understands. Numbers. And be sure to use the same metrics and language that they use internally to explain your benefits to them. Otherwise, it'll be like walking into an Italian restaurant and ordering Peking duck. No one will know what the hell you're talking about. So you have to find out what metrics they use and what business language they use to measure performance. How you can translate your benefits into their language to make sure they understand it is critical. And many sales professionals are guilty of using their own language and dialogue and expecting their customers and prospects to understand what they're talking about because that's their daily grind. That's what they talk about internally. No. All too often the prospect or customer, it just doesn't resonate with them because it's not in their language. That's why you need to use terms that the prospect uses, and in order to understand them, you have to be well researched. We'll get into this later in the course, but you need to think of yourself as half, even McKinsey consultant and half sales weapon. That, my friends, is the difference between a salesperson and a sales professional. We add value. We don't take things away. We bring that value and we share in the net benefit across our organisations. We are net benefit providers, so customer centricity and understanding is key. And if you're going to talk the language of the C-suite, which you'll need to do, the easiest way I know how to build your financial literacy is go to a site like investopedia.com and understand the financial terms, understanding what would be consequential to your client. They're not hard to get your head around, and it'll really set you apart from the pack. Here are some terms you really should know and understand. KPIs, key performance indicator. MBO, management business objective. EBITDA, there's a good one. Earnings before interest, tax, depreciation, and amortization. It's just a funky way of saying net profit. Net present value, OPEX, CAPEX, ROI, TCO. RONA hurdle. Let's talk about the RONA hurdle for a minute. RONA hurdle, as I understand it, is the return on net asset. It's the cost of money internally. A CFO knows if she puts $100,000 into a capital investment on the factory floor, she's getting 4% every day of the week and she can take that to the bank. That's the RONA hurdle, the internal cost of capital. And unless your project that you're proposing jumps their RONA hurdle, you can forget it. Because if they're not going to get at least the guaranteed 4% that they'll get predictably elsewhere, you're not in contention. And remember, if you show a 5% return, that's not 1% better, is it? It's 25% better than their Rona hurdle. You know, fun with maths, don't forget that. And I know it's math in the US, but I'm a dinky-die Aussie, so it's maths. And you've got to know the difference between things like what's on balance sheet, what's off balance sheet, what's ARPU, what's depreciation, how they measure margin, what the cash flow situation's like, how that impacts projects. You know, this is all getting a bit esoteric and high level, but the higher up the org chart you go, the more financially literate you need to become. And all this stuff will come into play, and it will really differentiate you when you're literate in this area from the masses that just go in there and ask annoying questions like, you know, what's keeping you up at night? What's your biggest problem? What's your burning platform? No. You go in and you say, I've researched your business. I understand the landscape you're in. I understand the regulatory changes that are coming down the line that are possibly going to impact you. And I understand what's happening in other geographies that will be relevant. And what we've been able to do in your space in Europe, for instance, is to remedy those legacy issues and ultimately deliver net benefit to our clients in the order of, X, based on solving the following problems and helping them take advantage of the new systems that we were able to stand up for them in short order. So that's how you do it. You don't go in and ask questions on their dime. It's rude. You go in as a researched professional with a proposition and you test your hypothesis with the client. So you share your thoughts and ideas and you outline your hypothesis. Great word, isn't it? Hypothesis. Maybe an idea is a better word. And then you might say, does that resonate? Is that something we could talk to your team about? Who else would need to be involved? That's how you sell. You don't go in and ask them questions on their dime. It's rude. You need to understand also the difference between a lead indicator and a lag indicator if you're going to be financially literate. A lead indicator is something like Net Promoter Score, which has an indication of things that are about to happen, like our sentiment went down, so profitability is probably going to be impacted. That's a lag indicator, profitability. NPS is the lead indicator. The more financially literate you become without, just playing, bullcrap bingo, and I wanted to say another word there, but I'm not rude. If we're off camera, I would. Bullcrap bingo, where you're just sprouting terms, don't do that. Be financially literate. It's not hard. I got 260 out of 500 in my leaving certificate in my HSC, which is the Australian, final exams of high school. And I can do it. So if I can, you can too. And the more you build your financial literacy, the better you will understand how you can dive in and articulate tangible value that lead to sales campaigns which will gain their own momentum, rather than just being an old-fashioned hack who's out there looking for buyers and chasing orders. And if you get this right, you're on the way to being a real rainmaker, I promise you. Now, a simple example of how to put your UVP into the prospect's language based on unique market conditions, for instance, is something like this. Our solution's been shown to increase EBITDA by 3% within 18 months on average across similar companies in your industry. In your instance, this would translate to an X dollar benefit to your business within 18 months. Now, obviously, you need to be careful on how you structure that language without guaranteeing things that you can't guarantee. But you need to substantiate it also with the real-world examples of other customers you've had experience with in the same space. And that sort of thing will resonate because it shows risk mitigation. For change equals risk. And you're asking a customer to entertain change, and change equals risk. Crossing that chasm, there's risk, right? From the old to the new. But, you need to understand that you are there to provide net benefit to their business. And your company and their company are joint stakeholders in net benefit, a mutual transaction. So think about being a sales professional like that as someone who provides net benefit to your customers and stakeholders, and that you're able to be far more accurate and buoyant with your forecast because you're generating deals that are self-propelling because the customer's driving you to transact. But think of it as, being a sales professional who is of value to your clients, and is sort of like a consultant who gets commission, if you will, and that your companies share the net benefit. And don't forget, forecasts end up either at an earnings call or a bank, at least at senior management. So say goodbye to using hope as a strategy and delivering an act of fantasy fiction at your manager's feet. Have a buoyant and accurate forecast that is, relied upon because of the momentum you've built through instigating change for advantage for your clients. But anything you propose should be of consequence and time-bound as well, and that will give the impetus for action and will ensure that you have momentum and a healthy forecast if you do this right. Now remember, you're trying to convert this prospect to a customer as well, and not just simply be, sending empty promises back to management, thinking, well, they said they were going to buy in June 30, and I've worked with these guys before. I don't know why they haven't. No, you need to be deep in the business and understand the gates of this deal and understand how they go through the gates, and that your proposition is so compelling that it's got its own steam, own momentum. So by way of example, new legislation in an industry vertical may mean that your prospect needs to make compliance changes within a set time frame, and your proposition can help them get there within that time frame to avoid perhaps penalties, because you knew this because of your research. So look for changes such as this for sales, and again, as I said, say goodbye once and for all to using hope as your strategy. Hope ain't a strategy. Too many people rely on it. So here's an example of a UVP that I've used in the past for QuotaKrusher. I was courting a big insurance company. They're a broker. So there's the insurance originator is their product supplier. They are the broker, and then there's the end customer. The broker takes 30% margin from the insurance originator and then sends it to the, transacts with the end customer. Now, I was looking at a way to understand what would be QuotaKrusher's value to this organisation. And I did the research, and within an hour I came up with my UVP. This broker had been a darling of the stock market because it was buying its competitors, and it had swallowing its competitors so rapidly that it now found itself as one of 4 competitors that controlled more than 75% of the market. So my research showed me that the regulator, the competition regulator, is going to say, hang on, you can't keep buying the market. Whether they will or they won't, the indications are, based on my research, that they will eventually start to stop that party from, happening. So they're going to lose, the gloss in the share market because their share price has been going through the roof. And the other thing that's happening is the insurance originators are eyeing off the end customer to go round the broker and say, well, why are we giving you guys 30%? When we can go around you and go directly to the customer? Well, not if we're having elevated business conversations that you couldn't even understand. Then our margin is safe. So QuotaKrusher's value to the insurance broker was helping them elevate those business conversations with their sales teams to fend off a potential attack from their own supplier to their customer, right? When they're eyeing their 30%. So I translated it back, and also help them grow through organic growth rather than acquisition, which is going to come to an end pretty soon. So I translated that back to numbers, and based on the EBITDA of the company and the turnover and profitability, I translated a 1% improvement in their sales would have meant a 4,000% ROI on their training investment. So that's a UVP that you do, and that was within an hour I came up with that. That's the sort of conversation that will resonate with the C-level people. And what you need to understand is this, listen carefully. The higher up the org chart you go, the simpler it becomes. A service manager is going to be interested in service queues, wait times, etc. A CEO is going to be more interested in what's the bottom line. Has it improved my risk profile, and has it improved profitability? Risk and profitability. That's what they're concerned about, right? These people down here, not so much. They're following KPIs of matrix and line of business. You need to be financially literate to be able to climb that ladder with credibility and get yourself into the C-suite where the big deals happen. But you also don't want to tread on heads on the way up. Do that very carefully. And they're the kinds of messages that will resonate across the business. If you understand the lines of business, what the metrics are that matter to each of the LOB managers, and then you're able to articulate that with their support and sponsorship up the chain to the C-level people. Be very careful going, C-level down. You need the troops along the way with you, because these people are typically democratic leaders, and they won't, just autocratically, make decisions without the support of their people. So that's it, people. Unique value propositions. Make them time-bound, make them unique, make them compelling, put it in their language, and make it consequential. And do the big deals. See you in the next module.